Hello and welcome, everyone. Thank you for taking the time to join me today. My name is Krista Majenst, and I'm your product education specialist here at TradeSmith. I do work alongside Marina Stroud, your TradeSmith product education lead within our education department. I have included the webinar script as a reference in the chat box and the PowerPoint, and those who registered will be emailed the webinar recording along with the script the following business day. A recorded version of this webinar will also be posted to the help menu within the TradeSmith Finance site. Once we complete the TradeSmith Bootcamp series, we will host the beginner and intermediate bootcamp series again. The webinars are updated based on new site releases and relevant information. And just as a reminder, our bootcamps are hosted every Monday and Tuesday. I host the beginner level boot camps every Monday at 1 p.m. Eastern, and Marina will do her intermediate level boot camps every Tuesday at 1 p.m. Eastern, unless otherwise directed. She will host the platinum webinars once a month, typically the third Friday of the month. All right, so let's go ahead and look at today's topics. All right, so today we are going to talk about the volatility quotient or risk, which is also known as the VQ, and the health indicators, which is the green, yellow, red light systems. I do want to make sure that you understand how our indicators work and the difference between them so that you can plan your exits based on, your trade plan. Everyone's trade plan will be different. The exit parameters each of you use will be different. We do believe that having a sound exit strategy in case the trade goes against you is just as important as picking the right investments. And so that's what we're going to talk about today is the VQ and the health. That way, when we go to add the alerts next week, you'll know the difference. All right, let me just get through the disclaimer and we'll go to the site. The information we present today and in upcoming tutorials is intended for educational purposes only. We are not financial advisors and cannot provide any individualized advice or recommendations. We are recording today's presentation, so if you do miss something, don't worry about it. You will be able to go back and rewatch it at your convenience. You can access the TradeSmith Bootcamp webinars right under your help menu, and I'll show you that once we get to the site. All right, so I'm going to get rid of this PowerPoint and we're going to pull up the website. All right, so I'm already logged into my TradeSmith Finance account. Just as a reminder, you will log into your account via finance.tradesmith.com. No matter what product subscription you have with us, you will all sign in the same exact way under our site, and your dashboard will be tailored to whatever subscription you have. Also, I do have access to the full suite of TradeSmith products with my Platinum subscription. So as we go through today's presentation, my site may look different from yours. Now, let's go ahead and just check out the help menu where you can go to access additional educational resources, including all of our bootcamp webinars and short how-to video tutorials. So you just click on the help menu. The TradeSmith Bootcamp and Video Tutorials folder is where Marina and my stuff is. You can register for upcoming webinars. If you have trouble with the Zoom platform, there is a troubleshooting guide that we created. Those of you that need to catch up on some lessons, you can start with the beginner level boot camps and then work your way up to Marina's intermediate lessons. Those of you that prefer shorter how-to videos, which are typically 20 minutes or less, you can check out the how-to video tutorials, which is usually on like a tool or one particular feature. And those of you that are platinum, you have a folder here now in the help menu. It's not an actual platinum dashboard anymore. All right, so I'm going to go ahead and show everyone that's new where you can go to book a concierge if you'd like. So we do offer a complimentary 30-minute concierge program where you can schedule yourself like a one-on-one with an agent in our customer service team. You'll be assigned to them and on a particular date and time that you choose, and they will call you on that date and time and walk you through the program, answer any questions you have. And there's no limit to the number of appointments you can have. We just ask that you book only one appointment at a time. That way everybody can get the help they need. And then once you're done with your appointment, if you still need help, you can definitely go back in there and book another appointment. Again, it's totally complimentary, so I would definitely take advantage of that. And those of you that need help booking the concierge and walking through those steps, in your script, there's like a short how-to video showing you the steps to register, because those of you that have never had a concierge, you do have to register, meaning you have to create like a username and password, because the login credentials on our site will not work for that site since it is a separate scheduling site. All right, so let me go ahead and get out of here and we'll get started. All right, I'm going to open an investment portfolio that I created with varying, volatility quotients and risk, like the health. So there's a bunch of different things in there just so we can compare all the different stocks against each other. So let me go ahead and go to my portfolios. And those of you may have noticed when you click on my portfolios, it does not take you to like your little filing cabinet where it lists your portfolios like it used to, because they moved this Analyze Portfolio tool to the front of the line. So when you click on my portfolios, it's going to take you into the portfolio analyzer. So you do have to click on Manage to get to your portfolios. All right, so this is the investment portfolio I created. So I'm going to go ahead and open it by clicking on the portfolio name. Looks like I have about 23 positions in here. All right, so what I want to first start off with is defining the volatility quotient or the risk indicator. So it's this column right here, the VQ, and you can notice if I tap on that, you can arrange it in ascending or descending order. So you can have the positions with the lowest VQ to the top, or if you click on it, you can have the positions with the highest VQ go to the top. I'm going to do it the other way though. All right, so we're focusing on this column right here. So the volatility quotient is the heart of our system. It provides customized trailing stops and helps determine how many shares to buy for any security according to risk. It includes historical price data for any given security, and that's how we determine the normal volatility or risk. We do use 3 years of price data, with the past year heavily weighted, more weighted than the previous 2 years worth of data. So you will notice our VQs are all different. You can see that the percentages is not like a one size fits all on this list. So we consider our VQ dynamic. We do update this entire list, these VQ percentages that you see here. We go in the database once a week and we actually recalculate all of the VQs in our system, because if we have to adjust them up or down for market moves, we will do that. And some of you may have gotten emails like on Saturday letting you know the VQs have changed. And that's what that is we are going in the system, once a week, recalculating them, making sure they're at the right percentages for their market moves up and down, or wiggle room, you can call it. All right, so again, you can see on this list, there are some stocks like Walmart that is low risk, and we have some stocks that are considered sky high risk stocks, okay? So they're all different. Now, if you also, for example, if you want to have a breakdown of the risk indicators, you can go to the help menu and search in our education. Just type in VQ risk chart and a chart should come up. I'm not going to do that now because it'll take us out of this page and I'll have to come back. But in your script, I did put the breakdown. So how we consider our breakdowns, like we put them in categories, if that makes sense. So there's 4 different categories. We have low risk, medium risk, high risk, and sky high risk. So any percentage that you see in this column right here, any percentage that is 15% or less, we consider that stock to be low risk. Any percentage from 15% to 30%, we consider medium risk. Any percentage that you see in this column that is between 30 and 50%, we consider that stock high risk. And then, of course, anything over 50%, and above, we're going to consider those stocks sky high risk. And there are people that do invest in sky high risk stocks. They're just risk takers. And then there's those like me that's very conservative. And I usually typically don't buy anything in my real portfolio that's over 30%. That's like my limit. So I usually invest in low and medium risk stocks. All right, so let's look at some examples. And the reason I want to look at 2 examples is because a lot of you are used to adding like a general 25% trailing stop. And we've gotten used to that from our newsletters, that's the advice that they give us, 25% trailing stop. But I want to show you how a general 25% trailing stop may not be the best suited exit strategy. And, for all of your stocks, not like a one size fits all. So let's look at Walmart. So Walmart here is considered low risk. It moves up and down around 15%. So remember, 15% or less is considered low risk. So the reason I'm bringing up the 25% trailing stop is if you were to just add, a blanket 25% trailing stop to all of your stocks, like an alert, a 25% trailing stop, you're actually taking more risk than necessary. So for example, Walmart moves up and down around 15%. And if you added the 25% trailing stop, that's a 10% difference between those 2 percentages. So you are, in fact, potentially losing more money with a wider stop loss. Now, if the stock typically moves approximately 15% up or down, it makes so much more sense to just use our trailing stops. And again, we're going in and we are keeping track of them and recalculating them. So if they do have to move up or down, we will do it for you automatically if you add the trailing stop alert on, our VQ alert. Of course, you do have the option to do a customized trailing stop where you can use the 25% if you wish. All right, so now let's take a look at Tesla. So we know that Walmart is moving about 15%. We're definitely not going to add a 25% trailing stop to that and add 10% difference more. So let's look at Tesla. I think it's at the bottom. All right, right here. And I'm sorry, guys, I don't have the little spotlight thing. So Tesla is considered sky high risk. It moves in the market about 51% up and down. So it needs 51% trailing stop, like wiggle room up and down in the market. Now, if you were to add a 25% trailing stop to Tesla, you'd most likely just be whipsawed out of the trade because it would immediately go over that because it moves way higher than that blanket 25%. If you were to add like even a 30% custom trailing stop to this alert, I'm sure it would go off within a week or so, or even within that same day you add the alert. And we're going to be adding these alerts next week also, and you'll see what I mean when we add a customized and using our VQs, because you can use both. All right. So let's take a look at well, I was going to pull up this article, but it's not loading for me. So those of you that want to still use like a customized trailing stop, we conducted a study. Well, I didn't conduct it. Our engineers did. Our research team, they went back several years and they did a study on like 1,000 individual trades, and they went back 20 years and tested out like the maximum percentage trailing stop levels. And we did find that the maximum trailing stop that you should use if you want to use a custom one, the sweet spot was about 40%. So we found that a 40% maximum trailing stop was a sweet spot, and it helped limit the worst losses while still allowing you to hold on to very volatile stocks for as long as possible. Okay, so if you are invested in Tesla, you can use RVQ. If you don't feel comfortable, with the 51%, go ahead and maybe add the 40% customized trailing stop. There is an article in your script. It's also in the Inside TradeSmith publications that we have on the dashboard, but check it out. I did include that. It was written by Justin Brill, our former analyst here at TradeSmith. He no longer works here, and Mike Bernick is going to start writing the Inside TradeSmith, by the way. So if you guys have not seen an email from Justin, that is why he is no longer working here. And the emails will now come from Mike Bernick. All right. Now let's take the VQ a step further. And this is where we add a momentum component, what we call the health indicator. So let's focus on this column right here. I'm going to sort mine where the green's on top. So you can either have the green on top or the red on top. I like to see green first, so we'll leave it like that. So this health indicator is the simple green, yellow, red light system that we use. And what it does is it helps you see, like at a glance, if the stock is in a healthy condition or not. This little eye bubble right here, you can actually click on that to get the menu, the picture that you see in your script. Let's go over what this is. So any security in our system, if it's in the green zone, we consider it healthy. We also consider the green zone a buy signal. So green is good. And usually green is meaning it's doing, good and normal in their VQ range. And typically it's trending up, not always, but usually trending up when it's in the green. Then the next levels are the yellow levels. So I want to pause here because I do want to show you. You will notice there's shapes inside these boxes. The shape for the green, it never changes. Don't pay attention to the shape. It's always going to be this triangle. It means nothing. The stop price, the red, will always have this square. It doesn't mean anything. The only shapes that you need to pay attention to are in the yellow zones, because you'll see there's 3 different yellow zones that a stock can be in. So the first one we have is, let me highlight this, is the yellow zone uptrend. And what this means is an investment has pulled back more than halfway between its most recent high, but is still trending up, okay? Then we have the side trend, which will have that little circle. And what the side trend yellow is, it still means that it's pulled back more than halfway to red. So all of the yellows are halfway to red, but the side trend means it's now sideways. It doesn't know if it's going to trend up or down. It's kind of in neutral, like flat. And then we have the yellow downtrend with the down arrow. So when you have one of these, it usually means that, it's still halfway to red, but the trend is now down. Sometimes, not always, and this is not advice, but on my stocks, when I do get these alerts that it's, in the yellow downtrend, sometimes I sell on the yellow downtrend versus waiting for it to get into the red, because a lot of these stocks, if you have a yellow downtrend, I don't have one on here, but on my portfolio right here, but if you hover over a yellow downtrend, if you have one in your portfolio, it will tell you that it's impending the red zone, and 98% of the time it does go in the red. So sometimes I do sell them on yellow downtrend. All right, and then the yellow zone, since we have those 3 different sub-levels, there is math behind the yellow zone. I did include it in your script of how we calculate the yellow zone. So it's pretty interesting. So check that out. It's just the math behind the yellow zone. All right, so when a position is in the yellow zone, the security can either move back into the green zone or continue moving lower until it goes into the red zone. And that's what I'm talking about with this. All right. Most of the time, if it's uptrends, it does move back into the green, or it could, change to side trends or even change trending down. But you'll get those alerts on the health if the yellow do change the trends. So the red zone is our last color. So the red zone, we consider our sell signal. So the health indicator is a system alert, that you assign to your portfolio, like globally. And you basically would get these alerts if it goes into the red zone. And if your exit strategy is to, just focus on the health indicators and not the VQ, and say you get an alert or an email or a text letting you know that this position has gone into the red zone, if that's your exit strategy, you would then go ahead and sell when it goes into the red. So that is basically you going back to your broker site and putting like a sell order in. And stocks that you're researching in our system and you see that a stock is in the red, we consider it not healthy. And those of you that are following the health exit strategy, you would not invest in a red zone stock at all. So you would probably like bypass that when you're doing research to potentially buy something. And your first clue would see that it's in the red and you would just totally glance over that one and go to the next. All right. Let me just check the chat really quick. Those of you that are joining us, I'm sorry there's nobody on chat, but please still feel free to leave your questions and we will get to them at the end. Now, those of you that have a basic subscription with us, you do not have access to the green, yellow, red light system, okay? So if you're not seeing these colors, that is the reason. All right, so again, let's just review the health indicators. Green means go, okay? Just like a traffic light, it's good, it's healthy. The yellow zone, you do have to pay attention to when you do get these alerts, just to see, how they're trending. Because remember, all the yellows still mean they're halfway to red. The only difference is it could be halfway to red, but it's trending up and it may go back in the green. It's sideways, neutral, but it's still halfway to red. And then we have the yellow downtrend, still halfway to red, but trending down. All right, and I did put that in your script as well. So I'm going to go ahead and get out of here so we can look at this. So you'll notice in each of these little pills, I like to call them, the green, yellow, and red, you'll notice that there is, numbers and letters. And the number in these buttons basically is just letting you know how long the security has been in its current state of health. So for example, which one is this? Marathon has been in the green zone for 2 weeks or more. That's what the W is for. You can see Walmart has been in the green zone for 1 month or more. And then let's see if we have any. I was looking for, we have a D. Okay, so if you see a D, that's days. So KFS has been in a yellow uptrend for 3 days. And then the last letter that you could see is a Y. So for example, Merck has been in the green zone for 1 year or more. That's really good, actually. So they've stayed in this green zone for 1 year or more. All right. You can also hover over each health button to determine when it triggered its health indicator entry signal, meaning it went from red to green, and you can see the remaining risks. So for example, Marathon, you can see where it says MRO, which is the ticker symbol, triggered an entry signal on December 17th, 2020. So what that means is back on December 17th, Marathon was in the red zone. And on this date, on December 17th, 2020, it went back into the green zone. And that may confuse some of you guys because you'll say, then why does this show 2 weeks that it's only been in green? But it's been 2 weeks in the green from the yellow zone. But the last time it was in the red zone and triggered an entry signal was December 17th, 2020. And you can see those on the chart when we get to them at the end. I'll show you where, it's when you see this and you see it's, in the green for 2 weeks, but you hover over this and it shows 2 years ago and you think it's off. It's not. It was in the yellow zone before it went into the green 2 weeks ago. You can also see the remaining risk on the positions when you hover over them, where you can see the remaining risk on this position is $7.72. And we're going to come back to that because I'll show you how I calculate that to make it a little easier with my views. All right. And then since we're talking about the reentry signal, meaning went from red to green. So if you sold your position on red, we are still watching your closed positions. So if you sync with us and say that you're exiting something at your broker because you got that alert that it went into the red zone, we will come into your portfolio, close it on our side. But when we close it, we put it in the closed positions tab here. And basically, I don't have any here to show you, but it would be listed here if you sold on red. And if it goes back into the green, we will alert you. That's a re-entry signal. So we're basically letting you know that the position that you sold that was on red came out of the red zone and is healthy again, and it went back into the green. Okay. And then, that may be a good time for you to get back in if you choose to. I'm just going to go back to my open positions. All right. So for the reentry rules, we do have to have two things happen for a stock to go from red to green. So the security's price must rise more than 1 VQ from its lowest bottom since it hit the red zone. And then the slope on our smart moving average, which is our trend line, and I'll show you that when we get to the charts, that also must be rising above a minimum threshold. The minimum threshold, though, is proprietary information. It's like an algorithm. So there's no number that we have listed. We just say above a minimum threshold. And then, if a stock that's in the red doesn't meet those two criteria, then it's not going to be strong enough for us to have a reentry signal sent to you guys. All right. So do keep in mind, though, no indicator is 100%. The health indicator, will never get you out at the very top sometimes, and it never gets you back in at the very bottom. We just confirm that prices are moving higher and that we're sustaining an uptrend before we give you the green light, letting you know it's gone from red to green. All right. So let's take a look at the remaining risk. So with the respect of the health indicator, the remaining risk is determined by subtracting the health stop loss price from the latest close. So that's all that is. And we do update the latest close prices each evening between 6 and 8 p.m. Eastern time. So the remaining risk on any trade is based on how much further the price has to fall before it's stopped out, meaning it's gone into the red. So what I suggest doing, and I have this on all of my portfolios, is adding a view where you have the health stop price column. For example, Marathon, you see where it says the remaining risk of this position is $7.72 per share. Those of you, that don't work here or, who know what that means, that is basically taking that amount from the latest close. So you would take $7.72 and subtract it from the latest close. And whatever that calculation is, it should be this right here. Because I have the column, this is the column I'm talking about. Instead of me having to do the math and figure this out, like take the 772 minus off the close, I can just add this view, this column, where it does it for me. So you can see, if I hover over this, let me see if I can make this a little bigger right there. It's the health stop price. So I like to have this column because I like to have it side by side with the latest close, because it allows me to see how close, they are when this will turn red. All right. So like this, for example, this is very close. So AT&T, the remaining risk is $3.24. So that means that if AT&T closes at $16.69, this will go into the red. And I know that because I have this column. Those of you that don't have this column, all you have to do is just open this little pencil here. And it's over here, the health stop price. You can put a check in the box and keep this box open and scroll down, because if you add anything up here, it's going to go all the way to the end. So you have to scroll down, take your scroll bar, move it all the way to the end, and it should be over here. Those of you that are adding it on now, you're going to click on it and basically drag it to where you want it to be. I suggest putting it next to the latest close like I have it. And then once you have it in the spot you want it, just let go of your mouse and it should drop in there. And then all you have to do is hit save. I did put that in your script, the instructions, so you can always do that later. And we will do that next week too when we add alerts. All right. So I want to show you guys that because it's just so much easier to add this column versus doing the math. Now, so we have the held stop price, like the remaining risk will only show obviously on the green and yellow. The red is not going to have it because it's already stopped out. Okay. That's why it says NA here. And when you hover over the red, you don't see like a remaining risk amount. So this brings us to our next question. You'll see that I have a mix of stocks in here. So I basically am conflicted. I do go by the health indicator. So I do like these alerts as my first alert, letting me know, if it goes into the red, I'll exit. However, there are going to be cases where your primary exit strategy is to get out on red, but say, you have a stock that has been in the red even before you got our program and you're actually making money on it, maybe because of the length of time that you've held on to it, the price you got in, so many different factors. So, some of you will still have red zone stocks in your portfolio. So if you're following this health indicator and you do have these red positions remaining in your portfolio, when you hover over these, it does let you know that we're waiting for a reentry signal, meaning going from red to green. But since it's stopped out on red, the health indicator is basically only waiting for a reentry signal. It's no longer watching the health. So those of you that have these red positions, you definitely want to add on either the VQ alert here or like a customized trailing stop or a fixed price alert, which we'll get to next week, because the red zone stocks are basically just sitting in your portfolio waiting for a reentry. You don't really have a safety net like holding it like a second alert. Okay. So those of you that have red, definitely pay attention to those and make sure you add, or attend next week's class when we add the alerts for the red zone positions. All right. And then there is one more thing I want to show you about this health, because it is very comprehensive. In fact, a lot goes into the health, a lot of algorithms, calculations, formulas. It's crazy. So our health indicators, sometimes you might see an NA. I did add one to this portfolio just to show you guys. So you can see the ticker GDTC shows the health is not available. It shows NA. And that's because the health indicator, these green, yellow, red light signals that we have, in order for us to assign it a health, it does have to be trading for approximately 521 public trading days. So that's approximately 2 years. So if the stock hasn't been trading for 2 years, we're not able to assign a health. So it's, it's basically like a brand new trade. We don't have that historical data to even assign what color it's going to go into. So we need 2 years. If we don't have the 2 years, it's going to show NA. The VQ, we need 1 year. So this position has a blanket 25% because it hasn't even been trading a year yet. So if it's less than a year, it's going to be a blanket 25% trailing stop until it reaches a year. And then we will be able to see how it moves in the market up or down, and we will assign it a VQ percentage. But this will still be in the gray because this needs 2 years. Okay. So this will come first, the VQ, because we need 1 year. This is approximately 2 years. So for these newer stocks, in the market and stuff, you can definitely add the VQ trailing stop to 25%. But mostly for these, you would use like the fixed price alerts, which we'll show you next week. So I'm going to leave this one in my portfolio and we'll come to this one next week to show you the different alerts that you can add on to the newer stocks on the market. All right. Let's see here. now I do want to make sure I did not add any crypto. So those of you that have crypto and trade cryptocurrency and you have it in your portfolio, crypto is going to work a little differently when it comes to the health and VQ. So our cryptocurrency still shows, the health indicators, but the VQs, we don't really need a lot of data. We just need, believe it or not, approximately 17 days for cryptos to give it a VQ because of how volatile they are and how they move in the market. So cryptos, we literally only need 17 days to assign it a VQ. So let me see if I can just show a crypto here. And you do have to have a crypto subscription to search for any cryptos. So if you guys are trying to search crypto up here and it doesn't come up, that's the reason. Usually USD is at the bottom. All right, so I'm just going to type in Bitcoin for a minute. So you can see that we still have the health for the cryptocurrencies and the VQs. We do assign VQs to our crypto. This one, is not as volatile as most of them. A lot of the cryptos are going to have percentages in the 90s, so sky high risky crypto. But then you'll find like Bitcoin is considered medium risk. So again, we only need 17 days for that. All right, let me go back to my portfolio. Okay. All right. So now what we're going to do is we're going to look at the position card page and we're going to look at the chart. Okay. So I picked Walmart. So I'm going to click on Walmart. So to get to the position card page, you're just going to click on the blue hyperlinks when it goes. All right, so we're going to look at Walmart. So you can see I clicked on Walmart and I'm focusing on Walmart, the position card page. Anything you see on this page is specifically for Walmart only, okay? Not all those other stocks in the portfolio. So in your script, the photos and stuff were as of April 14th, the latest close, which was Friday. All right, so here's the indicator. So you'll notice on that first screen where it showed all of your positions, you could see at a glance the health and VQ, but they're all mixed together. So sometimes it's hard to focus and look at them, under your portfolio. So when you click on each ticker individually, it's a little easier to understand. So we do put the indicators on this page as well. So you can see that Walmart is in the green zone. You can still hover over this and see, the remaining risk per share. We're not going to talk about timing. This is for our timing or cycles product, it used to be called. So we're just going to leave that out because that is very complicated and a lot of you don't have timing. Then you'll see the risk that we talked about, that VQ column that we were looking at with all the different percentages. That is going to be here. And it's going to tell you that it's considered low risk because, again, it's anything under 15%, it's considered low risk. So when you come to this position card page, it will be listed like the risk here. It's not listed on that first page. It just shows you the percentage. And if you don't remember off the top of your head what level a percentage is considered what, it'll show you on this page. So Walmart's considered low risk. It's in the green zone. So if I were researching Walmart, those are two indicators that I look for. I want to make sure it's in the green zone and, that's not too risky. So I could definitely check these two off my list as, potential to buying Walmart. So this right here, I want to point this out because this is not the green, yellow, red light system. Okay, I know it's showing yellow, but this is our smart moving average. Okay, and in your script, I did put a link of what the smart moving average is. So our smart moving average is not like what you think of when it comes to smart moving averages. You may think of like a 50-day or 200-day smart moving average. We don't actually have a number in the smart moving average, like days. Every trend is unique in our database. So every stock has, the smart moving average, and it's unique to the stock. And so we don't really assign it days, like the 50-day or 200-day. And that's why you're not going to see a number there. So don't let this confuse you as the health indicator. It is not. So the smart moving average basically is letting you know, if it's moving up, down, or sideways, like how it's trending in the market. We do use this for the reentry signal, though. It does incorporate this. All right. And in order to see this smart moving average on your chart, you do have to turn it on. For some reason, the chart settings does not put the smart moving average line on the graph. You actually have to do that. So let me do that really quick. I'm going to go to chart settings. So you see how the smart moving average doesn't have a little check in it? I have to click on there. And that's the dotted line. You see this dotted line? That's the smart moving average. Let me turn it off and you'll see. And then when you turn it on, you should see this dashed line. I'm going to close my chart settings. All right, so this right here, the smart moving average corresponds with this dotted line. And you can see on the chart, it's flat. So that's why it's in a side trend. Again, side trend. It's not trending up. It's not trending down. It's considered neutral. It's just like flat, basically. So even though it's in the green zone, it's not trending up or trending down, okay? So this could be a factor when you're researching stocks. Usually if it's in a side trend, I don't really pay attention to it. Now, if I come in here and it's in a downtrend, yeah, that might catch my eye, because usually if it's in a downtrend, the price is also going to be going down, this price line. So the solid blue line is your price. And then the blue dotted is the smart moving average trend line. Okay, so definitely check out the article in your script. It's really interesting of how we calculate that. And there's a lot of information. Now, we're not going to talk about the business quality score. That's Marina's lesson that she does. So we're not going to talk about this one or the timing. We're just focusing on the health, the risk, and the smart moving average trend line. All right. All right. So since we are on the chart, let's take a look and see what all of this is, so you can know how to read the charts. Hopefully our charts are going to be going through like an update where they kind of look like the charts that you're used to seeing on like your broker sites, like the black charts that are very colorful. So we are definitely working on these charts because they are very hard to understand. So what you can do when you're looking at the chart, you do have the option to either look at it for 1 day, 3 months, 6 months, 1 year, 3 years, 5 years, or all. So if you're doing research on a particular stock, you can go back as long as you want to see, how this stock trends through the years. All right, I'm going to leave mine on 1 year because I believe all the bubbles are here. Let me just make sure so I can explain these. Well, I don't have the red bells. So let me see if I have 3 years. Okay. I'm going to take some stuff off my chart. You see that purple line? That's for timing, and it bogs up my chart. So I'm going to take it off so you guys can see. That should be better for you guys. And I'll take off the peaks and valleys since we're not going over timing. Okay, that should be better for you guys. I'm telling you, when you have the timing on, it like does all these weird purple and everything. So I'm going to hide this. All right, so that should be better. All right, I have mine on 3 years, but feel free to research yours for how many years you want. I just put on 3 years because I want to go over these bubbles that you see here, and I want to make sure it shows all the bubbles that we have that you could see on your chart. All right, so again, this solid blue line is your price line, okay? And you can see the price line has a yellow and red line. These are our health indicators. So you can see how if you go on the price line, you can see that the yellow and red basically walk. They just basically walk with the price line. And what it's doing is it's waiting for the price line, the blue, solid blue, to go into either the yellow or red line. And that is what triggers this to go from green to yellow, or, yellow to red. Okay. So it's the price is basically just walking along and waiting for that dip to go into the yellow. All right, so let's go over these little icons. So the first bubble that you see, I'm trying to see if I can get my spotlight here. Hold on. Oh, I can't. All right. This right here, the red H. So the red H's correspond to the health indicator, the green, yellow, red. Okay. So the health indicator is tracking the security's VQ from the most recently detected highest close price. So again, the red H is tracking the security's VQ from the most recently detected highest close price. And it does not matter when you enter the trade. We all are going to see the same health, the green, yellow, red. It doesn't matter if you don't own it. It doesn't matter if you own it. The health is green for Walmart, for anybody that looks at Walmart right now. And on the chart, you'll have the same H. So if you're looking at Walmart, your H should look just like mine. So you'll see that as higher highs are detected, it gets replaced with another H. So for example, you can see the newest high is here. And the reason you see the first H is because I have it on 3 years. But this is the most recent highest close price that Walmart has reached. So the highest close price was actually November 28th of 2022, and it closed at $152.31. It has not gone past that yet. So that's why that H will remain until it goes past the 152.31. And then this H will move to whatever that price is if it goes above this peak. Okay. So again, the red H corresponds with the health, the green, yellow, red. We all see the same health. The VQ is a little different, and I'll explain that in a second. All right. Now, the yellow line again is also the health indicator and the red line. So this right here, you can see where the price back, what day is this? On November 30th, 2020, it reached $146.93. You can see here, the price went from up here down here and actually crossed into the yellow. And this bell, the bells that you see on this chart, is an alert. So on February 22nd of 2021, this went from green to yellow, and you would have gotten an alert letting you know that it's moved from green to yellow with the date, and it'll tell you what yellow it is, if it's a side trend, uptrend, or downtrend yellow. So that would have been an alert. So the price still continues to decline, and you can see where it went all the way down and crossed into the red zone on March 3rd of 2021. And you can see a bell. So those that owned Walmart at this time would have gotten an alert letting you know that Walmart has gone into the red zone on March 3rd of 2021. Okay, because you can see the price went into the red line. So once it's in the red line, you can see where the yellow and red line stop. Do you see how it doesn't continue? Because when it's in the red zone, it will show you down here, this red bar. It's basically just waiting for a re-entry signal. Now, there are two entry signals. We have an entry signal, meaning you'll get an alert when a position's gone from red to green. On some stocks, we offer an early entry signal. The early entry signal is an aggressive signal. We basically have these formulas and algorithms that can tell us that the stock is definitely going to go in the green. We don't know when, but we have indicators letting us know that we can send out the early entry signals for those of you that want to get in early. But, it could be a couple days from that day. It could be months from that date. And when you get an early entry signal, you may be confused because it's in the red zone, and it's supposed to work that way. The early entry signal goes out on red. So you can see on August 10th of 2021, down here, this is the health indicator bar, by the way. You can see when we sent it out, it was still in the red zone, okay? And it's meant to do that. So those of you could get in on the early entry. Those of you that don't feel comfortable getting in on early entry, since it's still in the red, that's okay too. You'll just wait for the entry signal when it goes into the green. So you can see where we sent out the early entry signal on August 10th, and it did not go into the green until May 6th. So you do see that huge difference. It could be months, but we knew it would go into the green. It didn't go in the green that long, but the entry signal, those of you that don't want to get in on red on the early entry, you would wait for this signal, which is the green E, the entry signal, letting you know it's gone from red to green, okay? And it reached the new high that day on April 21st. That's an H, you can't really see it. So again, it was only there for a little bit in the green zone. And you can see, look at that. So on April 21st of 2022, it reached $157.36. And then look at this huge drop. It dropped and went into the red. Well, it went into the yellow, then it went into the red. So the I's is when the health indicator is initiated again. Okay, because remember, it stops here once it reaches the red. It stayed in the red. When it gets an entry signal, these yellow and red lines are initiated again, so the price can walk with it. And you can see that it went into the red zone on May 17th, and that's why you see a bell, because it's huge drop. And again, it stayed into the red zone, It just got an entry signal on February 13th of this year, and it's been in the green, except right here. It went into yellow for a short amount of time and went back into the green. So that's what I'm saying is when you hover over this and you see Walmart triggered an entry signal on February 13th of 2023, but you see it's been in the green for 1 month, that's where the confusion can come into. It was in the yellow. It wasn't ever in the red. So that's why it is correct. It's went into the green zone on February 13th of 2023. All right. So I know these charts can be confusing. I noticed in the script, I didn't put the chart legend. I did create a chart legend, so I will include that, and we'll have that on your alerts too when we add these alerts. But let's just go over the last icon, which is the purple ones. So these purple circles correspond with the VQ, our VQs, okay? So the purple icons are our VQs, all the different percentages that we assign. Again, we are not one size fits all, so it's not all going to be the same. But if you're using our risk indicators, this is more personal to you, because everybody's price, like your stop price, will be different, because the VQ indicators goes based on the highest close price on or after your entry date. So that's why it's so important when you upload your portfolio with us and you have missing entry dates. That's why we ask you to add the entry dates, because if you're using a VQ trailing stop, it's going based on the highest close price on or after your entry date, okay? So these purple icons, this is an I, but you can't really see it. So this is when the VQ stop was initiated. When you hover over this, this should match the date that you bought the position, as long as you have your entry dates all on your positions. So I bought this position on December 15th of 2022, and you can see where it initiated the VQ stop loss. So the highest close price for the VQ was $150.80. Again, everyone's will be different, because this is going based on the price and date that I got in at, okay? So it's calculating off of this high for the VQ. Then it shows the C, which is the stop price. So if Walmart went into the red, for example, and say I got the alert that the health went from green to red, and say I still wanted to stay in, but I have my VQ alerts on, I can wait for the VQ alert to go off, and that will be like my second alert letting me know, okay, Kristen, it's in the red zone, you stayed in the red zone, and you added, the VQ trailing stop as like your safety net. Now the VQ has gone off. That's your second alert letting you know to get out. And to know what that alert would be at, you would just hover over this. So if Walmart were to close at $128.50, I would get an alert letting me know to get out of the trade. And that's if you're using the RVQ alerts, which we'll go more into detail next week when we add these alerts. All right. And then on this chart, again, this is the health bar down here. These bars here is the volume traded from the previous day. So if it's a red bar, it closed lower. If it's green, it closed higher. This right here, I just want to point out before we wrap it up, this solid green is the historical VQ. So you can see if you hover over this at the bottom, the historical volatility, you see how the percentages are changing. That's us going in once a week and recalculating our VQs. So you can see at one point, this was at about 17% versus 15%, and it's actually gone down. So it became less riskier. And these are the emails that you get on Saturdays if we have to recalculate them. All right, so that's all we're going to go over on the chart. I just want to show you, what these icons mean. I will include the chart legend, and we will come into this next week when we add alerts, so you can see how the alerts work on the chart. And when they go off, we'll add some price alerts, some hard stop alerts, VQ alerts. We'll add some customized trailing stops and the health indicators, because you can have more than one alert on each position. Sometimes I use RVQ like this. Sometimes I'll use ours and a customized. You can use a customized trailing stop, like your own percentage. So say your newsletter is telling you to add a certain percentage, you can go ahead and add that and use ours at the same time. So we'll go over that next week. All right, so just please refer back to your script for the definitions of the early entry signal, the smart moving average. We just can't get all into that because that would take way too much time, and check out the PDFs that I included too. All right, so let's just go ahead and recap. So today we just discussed our volatility, the VQ, and the health, and the differences between them. So basically, if a security is moving well within its VQ range and it's in the green zone, and if it's trending up, that's good. That's a buy signal when you guys are in here researching. You know that we have all different percentages for all of our stocks in our database. It's not a one size fits all. Let's go back to my portfolio. There are stocks that, need more wiggle room than others for their market moves up and down. And then you can see some, are average, like medium risk stocks. So you can see they're all different. And again, we have a lot of historical data to be able to even do this. The heart of our system is actually the VQ. It actually started, trade stops started all based on the VQ, which are these percentages. So we have algorithms and formulas that actually do this. It's pretty neat. All right. And then again, if you have positions in the red zone and you just got our service, and they were already in the red zone when you signed up, and you are maybe syncing your portfolio and you see that you have a lot of positions in the red, definitely take a look at those. Maybe run them through the risk rebalancer, run them through like the PVQ analyzer, some of the tools. I would suggest going to the help menu and looking at the prior boot camps on the different tools to see how you can weed out those red zone stocks if your primary exit strategy is the health. So those of you that are very conservative, you don't even worry about VQs. Like, you don't care about this. You care about this, which is ultra conservative, to get out when it turns into the red. You won't stay in on red, basically. Then we have those that will stay in on red, but they add a VQ trailing stop as their safety net. Okay, so they'll have two alerts. And we'll go over that next week. All right. And I cannot say this enough. Please be patient with yourself. It does take time to learn a new program. What I would suggest doing is on this help menu, on the Education Center, if you do, you can type in, hold on, you can type in health, and we have a lot of articles that will go over like in a real in-depth review of the health. So definitely any search you want to do, you type in health. You can check out this short how-to video. It's about 10 minutes and it goes over the risk, health, and the trend, the smart moving average. Okay, so definitely check that out. All right, let me pull up the contact us 1 second. Thank you so much for joining us today. If you have any questions, please contact our dedicated customer success team. Tomorrow, Tuesday, April 18th, please join Marina Stroud, your product education lead, for a live discussion on the Copilot opportunities. She is going to review the Copilot strategies that help you generate income or hedge with limited downside risk. This lesson does apply to the Copilot program, which is available to those who hold a Copilot by TradeSmith, either a subscription, an Essentials subscription, or a Platinum account. However, anyone that's interested in Copilot is welcome to attend, which is, options, like our options franchise, our Copilot. So thanks again for joining us and letting us be a part of your educational journey. Until next time, bye for now.